All right, let's get right into it. Today, we're going to talk about the one single biggest mistake that separates the traders who make it from the ones who, well, don't. And it's not some magic indicator or secret strategy. It's a huge shift in focus that honestly can be the difference between blowing up your account and actually building a career. So let's break it down. When you first start trading, what's the goal? It's profit, right? Of course it is. You see it everywhere. Those huge wins, the dream of fast money, the chart that just shoots straight up to the moon. It's this incredible dream, and that dopamine rush, that's what almost every new trader is chasing. But here's the thing. The pros, the folks who actually do this for a living, they aren't obsessed with just the profits. Their main focus is on something completely different. Something that, honestly, most beginners just ignore until it's way, way too late. And that secret? It's a relentless, almost obsessive focus on risk. Now look, I get it. It's not as sexy as chasing 100% gains. But, as we're about to see, it is the absolute foundation for surviving and then, eventually, winning in the markets. So, what do we actually mean when we say risk management? The best way to think about it is like your defense. It all comes down to three key questions. 1. How much of my total account am I willing to lose on this one trade? 2. Where is my absolute non-negotiable exit point if this goes south, my stop loss? And 3. What's my overall plan to protect my capital so I can even show up to trade tomorrow? Okay, that all sounds great in theory, but let's get real. When a professional trader puts on a trade, what percentage of their entire account are they actually putting on the line? Is it 10%? 20? What do you think that number really is? The answer might actually shock you. It's just 1 to 2%. Think about how small that number is for a second. A pro with a $100,000 account is only risking 1 or 2 grand on a single trade. This isn't about being scared. It's about being smart. It's about making sure that a string of losses, which will happen, doesn't take you out of the game. It's about living to trade another day. So this one difference in how you handle risk, it creates two completely different journeys. I like to call it the crossroads. On one path, you've got the beginner running on hope and dreaming of that one massive win. And on the other, you have the professional who's just guided by a cold, hard, disciplined plan. And their fates? They're pretty much decided right here at this choice. And this lays it out perfectly. I mean, look at the left side, the beginner's path. They're swinging for the fences with huge positions, right? A lot of times, they don't even use a stop loss, which means a small mistake can become an absolute disaster. Their decisions are all driven by that roller coaster of fear and greed. Now look over to the right at the pro's path. It is the exact opposite. Small, calculated risks, an absolute obsession with protecting capital, and a strict plan they follow every single time. No emotion. And let's be totally honest about where that beginner's path leads. It's not a mystery. The outcome is almost always the same. It is not a question of if you blow your account, but when. Chasing those monster profits without any defense just leads to a zero balance. It's the most common story in trading, and believe me, it is the most painful one. So the big question is, how do you avoid that fate? Well, you do it by adopting the professional's mindset. And that whole mindset is built around one simple golden rule. This is the thing that guides every single decision they make. And here's the rule. It's simple, but it is so powerful. Your first job is not to make money. Nope. Your first job is to protect the money you already have. If you pour all your energy into just not losing your capital, trust me, the opportunities to profit, they'll take care of themselves. Survival has to come before success. Always. Let's just look at how this logic works. It's a really simple two-step process. Think about a professional fighter. Their first skill isn't learning a knockout punch. It's defense. They have to survive the other guy's attacks just to stay in the ring long enough to win. The market is exactly the same. If you can build the systems to simply survive, to not get knocked out, you give yourself time. Time to learn, time to adapt, and time to be there when your big opportunity finally shows up. Okay. This all brings us to our final and I think most crucial takeaway. To really succeed, you have to completely reframe what your job as a trader actually is. It's not about being some brilliant market predictor. It's not about having a crystal ball. It's about mastering a much more fundamental skill. And this is maybe the most important thing I can tell you. You can have the best trading strategy in the entire world, but if you don't have proper risk management, you will eventually fail. Period. On the other hand, you can have a pretty average strategy,
But with excellent risk management, you can survive and even do really well. Your real job isn't to be a market analyst, it's to be an elite risk manager.
So, I'm going to leave you with this one question to think about. I want you to look at your own trading, your own approach. Are you making calculated defensive decisions based on a real plan to stay in the game? Or are you just pulling the lever on a slot machine and hoping for the best? Because the answer to that question, well, that's going to define your entire future in the market.